vendor. What I mean by that is how can you find the right vendor that is literally a game changer for your business? So that's exactly what we're decoding during today's training. Look, even just one of these right vendors could be a game changer. I mean, make a massive impact in your business. So for example, if you're a flooring company, well, then to find somebody that will give you terms on all of your flooring supplies and let you pay them back over a month and a half, or 2 months is a huge benefit, even additional benefit if they report to the business credit reporting agencies. Or maybe you're just launching a business and you need what I have here. You need computers, you need cameras, you need keyboards and mouses and speakers. Well, all of this can be obtained from one single vendor. As a matter of fact, if you're working in an office, most of what you need from furniture, desks, and chairs and everything else can be obtained from just one vendor. I can go on and on. Maybe you're in the transportation business, and even one gas card that you can charge $30,000 on in a month is a big deal, because now you can put one or more trucks on the road, wait to get paid from the people that you're actually doing work for, and then have a month to 2 months or sometimes more to pay that back. So I can go on and on. No matter what industry you're in, there's oftentimes 1, 2, or 3 vendors that could make a big impact on your business. And today we're going to decode all of this, teaching you what vendors are, how they work, how to find your MVP vendor, and everything you need to know to be able to get approved. Before we dive in too much, I want to mention that next Tuesday, December 6th at 1 p.m. Eastern, we are having a very, very important live training on how you can get your 2023 business financing blueprint. I mean, this is the blueprint of how you're going to get money in 2023. So I'm sure if you are like I am, you're trying to plan next year to be the best year ever. And I'm sure if you are like I am, you already know it takes money to be able to have the best year ever. It takes money to grow the business. It takes money to scale the business. All the stuff you probably want to do now for your business next year, you already know is going to take money, and you're thinking through how to get it. There's no thinking through. I'm going to map it out for you next Tuesday at 1 o'clock Eastern by giving you the exact blueprint. How you can qualify for financing. Doesn't matter if you have bad credit, starting a business, have been denied before. I'm going to teach you all the different silos, or pillars, I should say, of funding, how to get approved for each one, funding anybody can get approved for, and how you can get a lot of money in a very short period of time. It all happens next Tuesday at 1 o'clock Eastern. You can register for this free event at creditsuite.com/blueprint. That's creditsuite.com/blueprint. As you're coming in, please give me a shout out. Tell me where you're coming in from and mention your company name. And if you do that, I'm going to get you a shout out here on the live stream. Sometimes our streams are seen by thousands, if not tens of thousands, or even hundreds of thousands of people. So give your business a free shout out. By the way, V, thanks for coming in from Forney, Texas. I love it. And the corporate builder is in the house. What's up? Thanks for coming in. Thanks for saying hello. Okay, so one to find your most valuable vendor for 2023? Well, the right credit lines really, like I said, transform how your business operates. It doesn't matter what product or what service you sell. There are more than likely vendors out there that supply that thing that you need to sell that make a huge impact your business. So for example, one of our clients dealt a lot with construction, and she had a company in town that was like a roofing supply business, all the supplies she needed for her actual construction business. She got one $300,000 credit line. Her name is Christine. She's even shared it with us live on a stream, and even shared it with us in our Facebook group as well. One credit line for $300,000 from her MVP vendor. And this is what I mean. This was a big game changer for her business, because she literally was able to rapidly expand, because instead of having to worry about getting the supplies that she needed to fulfill every order in each client now, and then get paid, and then actually have the money that she needs to pay that, right? The chicken or the egg. See, in this case, she gets a client, but yet she's got to pay for all of the supplies to do the construction and then get paid after the fact. That's hard to do. And a lot of small businesses like her, she can only do one project at a time because of that. Now she gets $300,000 worth of credit in one vendor. Now she's able to take on a bunch of different projects, use the actual credit to buy all the supplies she needs, do all the projects. Now she's got all that money coming in to pay off the credit. Again, a lot of examples here, but there's one MVP vendor or more that can get you the products and services that you need in your business, and it completely can change the way that you operate. So you want to get access to what you need when you need it. And that's not always often available when you don't have the money to buy it, right? So again, I use this example often because I think it's very important. If we look at how Walmart to get to be the number one retailer, the biggest retailer in the world, it's important to note that 80% of what Walmart puts on their shelves, they're using credit to buy. So think about that. The number one retailer in the world is whipping out a credit card, buying the inventory that fills their shelves, 80% of it, 8 out of 10 items you see on a credit card, then they take your money and they get your money to pay off the credit after you actually bought the item. They wouldn't be the number one retailer in the world. They probably wouldn't even have more than 500 stores if they didn't have that system. So it goes to show how big your company can be when you figure this out, because it gives you access to the money you need when you need it, and you no longer need to come out of pocket with the money to buy supplies or buy what you need to actually operate your business. Now you can use credit to buy those things, get the money in the door, and use the money that's coming in the door to actually pay off that credit. Okay. And it means having time to generate the revenue you need to pay your credit lines. And that's what it's about. It's about being able to buy all the stuff you need to produce your product, produce your services, sell your product or services, and then pay that off. I'll give you another example. Okay. We really supply the leads in Credit Suite to our company. They come from ads. They come from Facebook ads. They come from Google and Bing and YouTube, etc. Right? Well, we have a cycle of time where somebody buys. A lot of our software to help business owners build business credit might cost thousands of dollars. So a business owner, from the minute we talk to them to the minute we make a sale, could take us 2 months. So now we have to pay for an ad and not make a return on that for a couple months. How do you do that? Well, we've been able to build and scale into an 8-figure business because we've used business credit to do that. We used our credit card to come in and test the ads. We test the ads. We know they work. Then we scale our ads, knowing that if we spend for the ads now, turn on them in 2 months. Can't do this successfully if you're just using cash on hand. You're probably not going to spend 100, 200, 300,000 out of your pocket and then wait months to get a return, right? This is what's nice about business credit. And that's what's nice about these vendors is you actually can come in, you're able to prove concept, very little money. When you know it works, you're able to invest in the stuff you need to scale and grow your business without coming out of pocket. You're able to actually tap in and use business credit to be able to do it. And Tazanga, thanks for coming in. Again, everybody, give me a shout out. Tell me where you're coming in from. And also tell me your business name, and I'll give you a shout out here as well. And you have credit to your best vendors that will grow with your business. And again, that's the important part, is that a lot of time, 90% of vendors plus don't report the credit they give you to the business credit reporting agencies. That's good and bad. It's bad because they give us credit, but they don't report it. So nobody sees that they're issuing us credit. That's the bad part. But the good part is the reason for this is because a lot of them are too small to have a volume of accounts to actually report to the reporting agencies. So it's good in the sense that they are the vendors we actually need to operate our businesses. So I'm from a really small town called Elwood in Indiana, and we've got a big construction supply company right there in town. So this is a perfect example. They issue lines of credit to people in the town all the time. So we've got builders in the town, and the construction company and the construction supplier will give them lines of credit. Then those builders come in, they use their line of credit to buy all the supplies that they actually need to build people's homes. Then they build the homes and they get paid. Then they pay off the credit, right? But again, this vendor doesn't report. They're in the middle of nowhere in Indiana. They're a small town. But just the fact that they don't report doesn't give them extreme value to the builders that they're extending hundreds of thousands of dollars of credit to. So this is the idea, is we've got to find the best credit vendor that's going to grow with our business. Oftentimes they're local vendors that are actually doing this for us. But here's the problem. It's a paradox. Lenders and credit issuers want you to have a good business credit profile and score before they'll issue you credit. They won't entertain the idea of giving you money until you have it, right? So here's the problem. We need credit to get the money, but yet, we need to be able to get the money to be able to have the credit. So it's kind of this conundrum where we can't be able to build business credit. And we can't be able to get the money we need until we build business credit. But how do we get business credit if the vendors that we need to use won't give us business credit? And this is the conundrum that we're going to walk through and fix today. So how can you find credit issuers that will help you even from the startup phase of your business? Well, look, what if I told you there are hundreds of credit issuers who can work with you right now today? You can start a process today and start to get approved for vendors. And in 30, 60, 90 days, you're probably getting $10,000, $20,000 limit accounts with any vendor that you want to be able to actually work with. Well, see, that's the nice thing is using what I'm about to walk you through, you're able to qualify for credit even if you don't have any business credit established yet. Okay, so this is really, really, really valuable because even if you don't have business credit, you're still able to get credit with starter vendors to start building that credit profile and score, then use the established business credit profile and score to go out and get more and more and more vendors. And these have products and services you need to run your business. That's the best part is that, again, some people get caught in this trap of trying to build business credit to build business credit. They get starter vendors and spend just enough to get to the next tier and just enough to get to the next tier. That never works out for them because the purpose of business credit building is to get the credit you legitimately need to run your business. So I gave you the example earlier of one of our clients got $300,000 credit line at a construction company in her local town. Well, another one of the accounts that she got was $185,000 of financing at Ford. And this helped her get more of the vehicles she needs to expand her transportation business. And business credit alone, no other kind of financing, helped her go from a 1-truck operation to last time I checked with her, she was looking to buy a 50-truck operation because she's able to use the business credit to get the fuel, to be able to get the vehicles that she needs. And one of her other companies, she's able to get all the construction supplies she needs. So she's able to literally have multiple businesses that she's growing and scaling just using business credit to carry her there. And that's really what business credit's for. It's not to move from tier to tier to tier. It's to think about what your business needs and then get credit with vendors that sell you that stuff and then use that stuff to grow the business and then use the revenue from the business to pay off the credit and continue to do this to expand. And by the way, when I stand in front of large audiences in Las Vegas, where I was a few weeks ago or weeks before that in Arizona, wherever it may be that I'm in the world speaking about this, what's interesting is this accounts for about 85% of what business owners spend, which means about 8.5 cents out of every dollar or $85 out of every 100 you spend, you could use business credit to buy the stuff that you're buying to grow the business. You don't need loans. You don't need credit lines. Why does this matter? Because loans and credit lines are way harder to get. So think about this. All of a sudden, you have this really simple way to get money that works for anybody. I don't care if you're a nonprofit. I don't care if you're a startup or if you have bad credit or if you've been denied before, or you don't have collateral. None of that matters. You're still able to get it. And that form of money that anybody can get accounts for about 85% of what you need to buy. It can pay for. So that's pretty cool. Now, don't get me wrong. It might not be 100% of what you need to buy, but that's when you can use loans. That's when you can use credit lines. That's when you can use cash in hand. The bottom line is that we're using credit to come in and do the heavy lifting and buy the products and services that we need to be able to operate in our businesses, and then save our credit for credit lines and loans and cash on hand for other things that we might not do. Back to the Walmart, for example. The reason Walmart has 10,500 stores is they use business credit to buy the stuff they put on their shelves. Then that helps them save their cash and use their cash to open up more stores. It's how they have 10,500. They're using cash to expand. They're using credit to be able to stock the shelves. They're using credit to supply the stuff that they're actually selling in those stores. And the interesting thing is, when I stand on big stages, I show Dell, I show Apple, I show Amazon, I show credit reports from all of these biggest privately and publicly owned companies. They're all doing exactly the same thing. They're using other people's money, business credit, to buy all the stuff they can buy. Then they take their cash and use it for expansion. And this is what I want to do for you. Because if we can do the same thing and we use credit to buy the stuff we need, we grow and scale, we pay off the credit as we grow and scale, and at least lets us keep more cash in hand just for the purpose of expansion. And Virginia, thanks for coming in. Everything you're doing for us, I've learned so much from you. I appreciate that. Virginia from Sacramento, California is in the house. And Clinton Weisinger says hello from Eli in Minnesota. Wanting to know as much as I can. I'm in business student and self-employed builder. Hey, thanks. And thanks from St. Louis is in the house as well. So thanks everybody for coming in. Tell me where you're coming in from. I'd love to give you a shout out. So how do we get ready for this? Well, the first thing we have to do is we have to know that these vendors generally offer credit for your company only. Okay. So what I mean by that is that they're going to offer you credit, or their credit only. What I mean, or their company only. So what I mean by that is when we look at what a vendor is, A vendor is anybody that will extend you credit to buy their stuff. So let me give you an example. If I go to Apple and I get an Apple credit card, I cannot use that Apple credit card to go buy stuff at Dell. I can only buy Apple stuff with it. If I get a John Deere credit card, then I can only buy stuff in the John Deere store, John Deere tractors with it. If I go to get a credit card with Office Depot, then I'm only using that to buy stuff at Office Depot. Now, there are some vendors that do both. So let me give you an example. Sam's Club has a vendor account. You can get $30,000, $50,000 to buy stuff in Sam's Club. You can't use it at Costco. But Sam's Club also offers a MasterCard. And this MasterCard is what we call universal credit. It works universally anywhere. You could take the Sam's Club MasterCard and you could go buy stuff at Costco with it. So some vendors will offer you a Visa, MasterCard, universal credit you can use anywhere, and then they offer vendor credit. But when we talk about vendor credit, we're talking about a vendor that is giving you credit to buy their stuff in their stores, their locations, their products, their services. So again, almost every major retailer in the world is a vendor. Macy's offers these credit cards. Nordstrom offers them. Costco, Sam's Club, Office Depot, Home Depot, Lowe's, Apple, Dell, HP. You get the idea. Okay, and I'll even pull some of these up. So these vendors give you the ability to buy their products and services. They're giving you credit lines to be able to buy their stuff and only their stuff. Now, don't get me wrong. As we build business credit, we'll open up universal credit we can use anywhere. But for the sake of vendors, they offer us credit to buy their products and services. Now, you can get a business credit card to buy what you need from them, whatever the product and service is that they actually sell. Okay. And their qualification requirements are way than what we normally see with universal credit cards and with loans and lines of credit. Look, I have made my life about helping business owners get money. And the people that watch what I'm doing and watch these trainings, a lot of you have had problems getting money. You're here because you haven't been able to get money. And the reason for that is a lot of business owners mess this up. And what they're doing is they're applying for money they have no right to be applying for. There's no way they're going to get approved. They're just applying for the wrong money in the wrong place. And if that same person, if you go and look at the right money at the right place, you get approved. Wrong money, wrong place, you get denied. So let me give you an example. Let's say you are launching a credit repair company, an accounting firm, something that requires you be in an office environment. And that office environment, in order for you to do your job, you need computers here, you need cameras, you need keyboards and mouses, you need speakers, you need office chairs and office desks, you need printers, you need some cabinets, some filing cabinets. 100% of what I just described can be purchased at Amazon. It can be purchased at Office Depot. It can be purchased at Staples. It can be get it at Costco. You can get it at Sam's Club. So I just named like 6 vendors. Any of those 6 would work to get you 100% of what I just described. So that's exactly what we're talking about here. And the nice thing is they're really easy to get approved for. Like if you started building business credit today, 30, 60 days, you're getting these kind of credit cards. So you don't need to have good credit. You don't need to have collateral and cash flow, all the stuff. So while you're out trying to go into Bank of America and have them give you a credit line as a new business and they ain't going to do it, you could have easily have built business credit at the same time, walked in and got a $20,000 credit limit at Office Depot and bought all the stuff that you need. So why do we do it this way? Because it's easy. It's so simple. We can quickly build business credit. We can easily tap into these vendors. We can get credit with vendors that sell almost anything we can potentially imagine and use that easy money to fund 85% of what we could pay for. But then we need to use Facebook ads, right? And we can't use an Office Depot credit card to pay for Facebook ads. So now we can get a regular Visa card or MasterCard, or now we can get a loan or we can get a credit line for the stuff business credit won't cover. And so what this allows us to do is it allows us to use business credit as the heavy lifter to fund our business because it's easy and fast to get. And then the other stuff we can't use business credit for, then we can get other kinds financing where it might be harder to get. So we get lower approvals, but we don't care because business credit's doing the heavy lifting. And there's only some things that it won't pay for that we need to get loans and credit lines for. So here, let me give you some examples here. So when we talk about business credit, we're taking a look right now at our actual, and Curtis, hey, from Chicago, thanks for coming in. And one-on-one rapid freight, you can give us a ring, 877-600-2487 or info@creditsuite.com. Our team can talk to you more. And if you ask that same question about a one-on-one, they can talk to you about that as well. Okay, so let's just take a look at some of these options here, right? Let's say you travel a lot. Well, if you travel a lot, then getting a credit card that you could just use at American Airlines can be pretty valuable. It's valuable for me. It's what I do. I fly with American Airlines as my primary airline, right? We got a lot of banks. We got a lot of other sources in here as well. But let's say I'm a truck driver, an over-the-road truck driver. Well, it's going to help me to be able to get cards that I could just use at Conoco or just use at Chevron or Texaco. Okay, to fill up an 18-wheeler, it could be $600 to $1,000, depending on gas prices, right? So being able to have that $1,000 put on a revolving credit card where I might have 30 days to pay it back, that's a big deal. Because now I get 30 days to pay back this account with Conoco. I'm able to fuel my truck, do my deliveries, get paid from them, and then pay off the credit card. It's easier than trying to use my cash to be able to come in and get the fuel, then wait to get paid, and then not be able to take more jobs because I'm short on cash. Sam's Club, we mentioned them earlier as well, right? Thornton's, okay, Fleetworks, they sell all different kinds of stuff. I think Thornton's is like almost like a grocery store type place as well. So here's Dell. We can do the same thing with computers here, right, as well. Okay, we're able to do this with vehicles. So we're able to get Ally and Ford. We're able to actually get full-blown auto financing without personal guarantees or credit checks. Okay, so again, if we come in and we look at any of these, and I'm trying to find some like really specific niche examples. Here's a Costco as well. Okay, let's actually grab some that don't even report. And I like this because this really shows the value of this that's industry specific, okay? So here's IGH Hotels and Resorts. That's a really big deal if you're staying on their properties to be able to get credit. Why? Because if I fly into Miami for a really big presentation, then it's nice to be able to, now I'm flying with American Airlines using my American Airlines credit card. I'm staying at one of their hotels using their credit card. The whole trip is covered on credit. Now I can go in, land the big deal, get paid a month later, and pay off the credit. So now I'm actually funding my business in a smart way that allows me to actually use business credit to pay for the expenses before I get the money in the actual door, okay? So here's Uniform Wizard, right? So let's say you're in a business where you want to start something where everybody has to have uniforms. That's expensive. But what if you could actually finance those uniforms and then pay them back after the business is up and running? Here's Auto Parts, same thing, right? Maybe you're an auto parts store, or maybe in your business, you're a mechanic. And now all of a sudden you're a mechanic, you need to fix people's cars, but you got to buy the parts first. So let's say you're fixing a Maserati and it's $3,000 for the parts. Well, you're not going to get paid up front typically. It's kind of weird for an auto shop to do that. So now you can come in and buy the auto parts that you need for that repair. Then you're able to do the repairs, then able to get paid, and then pay off the credit. You get the idea. In almost any industry that you're in, business credit allows you to buy the stuff you need to do your deliverable, your product or your service, then get your money from delivering that product or service, then pay off the credit. It's just a much easier way to be able to actually come in and fund the business. And even startups, nonprofit, high-risk people can do this. Now, a lot of business credit offers different terms. Sometimes it's, and I'll give you an example here. So let's look at what we just looked at. So BAP Auto Parts here, they give you a net 30 term. But MFS Supply, well, they're 30 to 15 days. Okay, BCW, let's see what these guys do. They give you terms of 7 days to pay it back, 15 days, 30 days, or even 45 days to pay them back. And again, what's interesting here is that you can also get revolving credit as you grow your business credit profiles, but this gives you an example of how you're able to get credit with all these companies to do it. Now, what is MFS Supply? Well, they're a national distributor of renovation materials, including cabinetry, appliances, lighting, plumbing fixtures, HVAC supply. So we get an idea here, right? So what we're saying, and I'll give you an example. Let's say that we want to flip houses. Well, it can actually come in and use a program like we offer called Credit Line Hybrid to get the money you need to buy the house. Then you come in here and you get MFS Supply revolving credit card account for 30 grand. And now you have everything you need to be able to get all the materials to rehab that property to do a fix and flip. If you didn't have this, you'd be using personal funds to do that. So again, how many examples is there where maybe you're in the construction business, maybe you're a contractor, right? Maybe you're a general contractor. Well, you're not going to get paid till the work is done. So if you're being hired to renovate a bathroom, gee, Christmas, that could be $5,000 worth of out-of-pocket costs you're going to have. But when you're able to come into MFS Supply or Home Depot or Lowe's and be able to get a $20,000 credit line, now you're able to use the credit line to redo that bathroom. Then you get paid from the homeowner and you have 30 days to pay it back. Now you're able to pay off the credit. So now you have the ability to take on more jobs because you're not coming out of pocket with the money. You're actually using OPM, other people's money, to be able to do the job, then using the payment from the job to pay off the credit. And by the way, as I said, and I continue to say, I can give you endless examples, but this is how every single one of the biggest privately owned and publicly owned companies operates. They do it exactly the same way. It's how they're getting as big as they're actually able to get. Okay, and I got a lot of people coming in. I'm such a fan. I appreciate that, Rapid Freight. Thank you very much. Connie from Philly, Pennsylvania is in the house. Fuelman card is very good. Yeah, Fuelman fleet card is an example. Your transportation, that's a big difference in your business of being able to use these fuel cards instead of out of the pocket. So the terms vary, net 15, net 30, net 45, giving you 15, 30, 45 days to pay them back. You even can get revolving credit as well once you start building the business credit. Okay. There's no interest if you pay it on time or before interest accrues. So you might be saying, yeah, Ty, but you're going to go pay 15% interest on everything. No, you're not. Look, we run Facebook ads. And what we used to do, now we have a line of credit with Facebook. That's kind of nice, right? You do that by building business credit. But before we got our line of credit with Facebook, we used our business credit accounts to pay for those ads. Then we would pay off that debt before interest accrued. So all it did was buy us time to get a return from our investment while we paid no interest. Then we pay it off before interest accrued. Maybe we don't mind paying interest. Maybe we leave the balance on the credit card for 2, 3, 4 months. We could do that too. But again, the nice thing is a lot of these, you can pay it off before interest even accrues and still use OPM to be able to fund the business and not even really pay anything in really fees or interest. A lot of these accounts have no personal guarantee. You're not personally liable for your business debt. If you ever default, they can't come after your personal assets. You're separating your consumer and commercial credit. You're separating your personal and business liability as well. And again, you get what you need, your business needs to be able to thrive and to be able to survive because you get the money that you actually need to pay for. So how do you do this? Well, the first thing we got to do is we got to build what's called a fundability foundation. And what I mean by that is this. If I'm going to start building business credit today, I don't have anything on my credit report. So it's hard for a vendor to look. We talked about this in the beginning, the conundrum, right? How does a vendor approve me for credit when I have no history to show them? Well, the answer is that we want to set up our fundability foundation. We want to give them the perception of a credible business. We want to separate ourselves from the business. The business should have its own phone number. It should have its own address. We want the business to have its own EIN number and be its own separate entity like a corporation or an LLC. It should have its own website, an email address that's separate from our personal email address, a separate business bank account, a business license if we can get one. Well, these things give the credibility of being, or give the perception of a very credible business. If I go to apply for Uline, which is an example of a starter vendor, and Uline sees that I have a corporation and I have a virtual office, it looks like I'm in a commercial building even when I'm not, but they see a commercial address and then they see a toll-free phone number for the business. They go to the website, they see a professionally done website and an email address that's info@mycompanyname.com. I supply a business license that I can get in my county for $60. I have a business bank account set up. See, now I have the perception of being a real, legitimate, credible business. Now, let's look at it from a different angle. Let's say I'm a sole proprietor. I am the business. I'm not even separate. I am the business. My business phone is my cell phone. My business address is my home address. I'm using my personal bank account to be able to manage my business finances. See the difference between the credibility of these two businesses? So we want to build a legitimate, credible business. It's the step one, especially to start getting business credit. If we don't do this, the problem is we're not going to get approved. As a matter of fact, there's even business owners that are in business 1, 3, 5 years or more. They still have their fundability jacked up, and they're still confused of why they're trying to get loans and credit lines and getting denied. Well, you're getting denied. The biggest reason for denial of all financing, we look at credit cards, credit lines, and loans. We look at why they get turned down. More than half of them are denied because of this, because you don't have your business set up where it looks credible. You don't look legit. And so they don't even look at your income. They don't look at your credit score. They don't even get that far. They just turn you down because you don't look like you're legitimate. So we've got to set up the business where it's credible. I have all kinds of training just on this that you're actually able to grab on our channel. And maybe whoever's listening to this on my team could even type in to the chat a link to our mini course, which walks you through all of this as well. Okay. I used too much cash to fund my new business. Now I need advertising. Yeah, exactly. And this is a really common problem, right? So what Rapid Freight says is, hey, this is exactly what happened to me. What I did was I used a bunch of my cash to fund my new business. Honestly, for stuff business credit could have paid for. Then you ran out of cash. Now you don't have the money to grow the business because there's no more money left for advertising. We all do the same thing. We use too much cash for stuff we shouldn't use cash for. Then when we need to use cash for something like advertising in this example, we don't have it because we spend it all. This is what we're trying to avoid by using business credit to fund all the stuff we can use to fund, then keep our cash for stuff that it won't fund. For example, like Facebook advertising. Carl, what's up? Thanks for coming in from Las Vegas. I need to use the last of my capital for an acquisition. Please help. Okay, we can do that. Give us a call, and our information's right here, creditsuite.com/consult. You'll also see our phone number throughout this training, and we'll do a free finance assessment for you. We'll actually determine what's wrong with fundability, what to fix. All the financing you can get now that you don't even know you can get. And we'll even give you tips and tactics to build your business credit. So you can give us a call. We can walk you through that as well. And Virginia says, hey, I haven't started a business yet, but it will be all virtual. What would be the first steps to do? The first steps would be, and again, somebody on my team I really want to start this correctly, may type in a little link here to a mini course in the chat. Even if they don't do this, then if you go to youtube.com/credit suite and you just look at fundability, you'll find my detailed training on fundability, everything you need to know to actually map out your fundability. As a matter of fact, our YouTube channel has playlists that are just for getting loans, one that's just for building business credit, one that's just for fundability. Those playlists can help you. Oh, look at that. And there we go. creditsuite.com/foundation. And so this just got pulled up here. So I'm going to pull this up on the stream right here. And our team just typed this in. So if you go to creditsuite.com/foundation, you can even find a free mini course I put together that walks you through everything you need to know to set up your fundability foundation. So you can go to our channel. You have a YouTube, a playlist on our channel that will help you. And here is a link where you're able to be able to get a free mini course that'll walk you through that as well. And you are more than welcome. Okay, so next we want to add starter vendors. Uline, Granger are two perfect examples. Okay, I love Uline and Granger because Uline and Granger will give you credit when you have none, and they report it to the reporting agency if you have the fundability foundation set up right. Now, there's a lot of them. Okay, but again, those are a couple to get you started. We want to get starter vendors, ones that'll give us credit when we have none, and that report to the reporting agencies. Then we got to use these vendors. Now, we want to spend typically, some cases, $50 or more, depending on the vendor. So everybody's a little bit different. Sometimes they'll make you spend $50 to even report the credit to the reporting agencies, but we've got to make sure that we're spending money with the vendor and paying it back. That's how this works. So if I go to Uline, let me pull up an example here. So if I go to Uline as an example, okay, and we go in here, we go to Uline, and if we go to Uline as an example.com, and we go in and we set up an account with them. And then the next thing what we're going to do is we're going to go find the products we need. We're going to add them to our cart. We're going to check out. They're going to give us an option like invoice me. We're going to choose that option. And then we're going to pay them back within the term they gave us. If they say they want pay back within 30 days, we're going to pay them back within 30 days. Then what happens is that reports to the business credit reporting agencies. That gives us credit. Now we have trade lines or an account on our business credit reports. Now we have credit profiles. Now we have credit scores. And now we're able to use that to springboard off of to get even more credit. But we need to pay our bills on time because that is the primary driver of our business credit scores. And this really is the formula. We want to get our fundability foundation. We want to add starter vendors. As we add starter vendors, we're able to navigate through these tiers of building business credit. So I showed you this one. We looked at a bunch of vendors, but you can see here that we actually have tiers that you walk through. These are starter vendors. Then we start monitoring our business credit reports, and we move to the next tier and the next tier, the next tier. And the more of this we work through, the more tiers or types of credit then become available. And we keep doing this, following this proven system, and to eventually unlock bank credit, Visa cards, MasterCards, auto financing, all of which we were looking at earlier. Now, how do you find your perfect vendors? Well, these vendors are in competition with each other. They all want your business. Your best vendor is going to grant you very good terms. So the key is that you have to think about what it is you need. So if you need fuel cards because you're a transportation company, well, then you need to find the right vendor fuel cards, right? What gas stations do you frequent? That gas station offers a vendor credit account. Almost guaranteed they do. Okay, now let's think about if we're in the construction business, who do you buy your stuff from? Is it Home Depot, Lowe's, or a local supplier? More than likely, they are a vendor that offers you a business credit account. Okay, so you got to think about what companies that you're going to buy the stuff from that you need, and those are the ones that will give you good terms, really good terms, after you've actually established your business credit. So finding your MVP vendor is a matter of figuring out who you're going to need to use to grow to your business or who you already are using to grow your business. And that's who you want to start with to get credit. Now, remember, you're going to have to get Uline, Granger, some of these starter vendors first. But when you have a handful of these payment experiences, about 5 of these on your business credit reports, then most of these vendors will start entertaining you, issuing you credit. So again, which vendors do you want to work with? Which relationship will provide you the most value? That is going to help you really determine which ones you actually want to apply for. Then it's just a matter of filling out the requirements for credit and actually applying. Now, the best vendors are the ones you have the best relationship with, and they'll even give you trade references. Okay, and trade references help you build credit even faster. Remember, we talked earlier about 9 out of 10 vendors not reporting the credit they give you to the business credit reporting agencies. Just because they don't report doesn't mean they're not valuable, right? They'll still give us a trade reference. So if I have credit with John Deere, for example, and I'll pull up some of these, I just want to show you how vast this is. Because most people don't talk about this in business credit building because it doesn't really help you build business credit. And what I mean by that is if I get credit with a vendor that doesn't report to the reporting agencies, it might not help me build business credit, but because they gave me a $50,000 credit line, it's still very valuable for me. So let's take a look at some of these really well-known names. United Airlines, Meyer grocery store, right? I don't know if that reminds me of Meyer grocery store. Chase, okay, Horizon Banks, all kinds of banks. There's Northern Safety and Industrial. So let's look at some of the ones that we probably know the best. And as you can see, there's a lot of these, okay? I'm in our business finance suite, and this is the one our clients use to be able to successfully build business credit. Southwest Airlines, Delta, okay? So you're getting the idea. O'Reilly Auto Parts. We're able to get a lot of credit with a lot of vendors that don't report the credit to the reporting agency, but they're still valuable because they sell stuff that we want and need. Okay, Best Buy, for example, they sell stuff we want and need. They'll give us $20,000, $30,000 credit lines, but they don't report it to the reporting agencies, but they'll still give us a trade reference to help us get other kind of credit. So just because they don't report doesn't mean they're not valuable. They will give us trade references as well. But again, we want to use the ones that actually provide the most value, the ones that we're going to use the most. Okay, that really is the formula. Now, we have hundreds of these vetted vendors. I've just been scrolling through, and you've probably seen hundreds just while I've been here. And again, what's nice about working with Credit Suite, if you decide to do that, is that we even list the underwriting guidelines for every source. We actually have special relationships that help us get all of the data from the reporting agencies of every account that reports. Then we have a data team that validates with them. We get their backlink to apply, and we're able to tell you the exact terms they offer, personal guarantee or no personal guarantee. In this case, there's no personal guarantee required, and the exact underwriting requirements to get approved. We don't publish this information because it literally changes daily, but you can think about the value of this. If we tell you, do business credit building in these steps, we give you a coach to stand beside you to walk you through the process. We give you access to every single source to tell you if you're pre-qualified or not, if you can get approved or not. It saves you a ton of time. And then we tell you exactly what you need to get approved, so you only ever apply for accounts that you know you're going to be able to get. So if you're interested in talking more, and a lot of people said, hey, how do I get in touch? How do we talk more? I've been following you for a while. Then all you need to do is just get in touch with us. Here's our number, and you can schedule at creditsuite.com/consult. My advice, don't even schedule. Just give us a ring. Take a screenshot right now, and you can either go to creditsuite.com/consult to schedule or give us a ring at 877-600-2487. When you do, we do a free finance assessment. Here's what happens. 3 things. 1, we do a fundability check for your business. We do the check lenders would do. We tell you what's wrong and tell you what to fix to improve your chances of getting money, period. You're probably getting denied, like I said, because your fundability's messed up. More than 50% of denials. That's why. We're going to help you figure out what's wrong and what to fix. If you have business credit established, we'll help you get your business credit reports for free. Only place in the world you get D&B, Equifax, Experian credit reports at no cost. We get them for you for free. If not, or you do, doesn't make a difference. We're still going to give you tips and tactics to build out your business credit. And the third thing we're going to do is do a funding and qualification to tell you all the financing you can qualify for. I can't tell you how many business owners are down to their last dime, think there's no way to get money. They call us up and they're like, yeah, there's 3 funding programs you can get right now for 50 grand, 100 grand, 150 grand. And it's a saving grace to them. So again, in this assessment, we do a fundability check. We give you tips and tactics to build your business credit. And we also come in and tell you all the money that you're able to qualify for right now. Don't forget, if you want to jumpstart your business credit building, then you can get the step-by-step process, including more starter vendors, by grabbing our guide that's been downloaded over 1 million times at creditsuite.com/EIN. And do not forget, if you want money to grow your business, we are going to lay out the 2023 blueprint for business financing success next Tuesday at 1 o'clock Eastern. It's a huge live event. It's going to happen at creditsuite.com/blueprint. You can register, and it's 100% free to be able to take part. Liddell Buggs, what's up, Liddell, man? I miss you. It's good seeing you. Well, it's good, Ty. Thanks for coming in. And everybody, thanks for coming in. Thanks for giving me a shout out. Thanks for telling me where you're coming in from, saying hello. Give me your business information as well. If you got value for this training, like and subscribe on the channel you're on. If you're watching on YouTube, click the little bell beside subscribe and click all for notifications. So when we go live, you are notified. On Wednesday, we have an interview on the Business Credit Financing Show, our podcast. It's got over 600 episodes and 500,000 downloads, very popular. And then on Tuesday and Thursday, we go live with training just like this. And if you subscribe on YouTube and select all for notifications, you will be notified. It takes less than 1 minute at the top right of our page, creditsuite.com, to be able to subscribe to our social channels and get all kinds of tips to help you get money. And on our website, we have a breakdown of all different kind of funding products, what it takes to get approved, everything you need to know about business credit. We got 100 blogs with hundreds of blog posts that give you information. We even have a lot of information on fundability, even a quiz, so you can see how fundable your business is. All of that's available on our main website, creditsuite.com. So I'm going to go ahead and wrap up. Thanks for tuning in. And T Love says, this information is gold. There should be way more people, entrepreneurs in here. I know, but here's the nice thing, T Love, is we've got a lot of people right now that are actually live on different channels throughout our network. And we get a lot of exposure for people after the fact because they're not able to be here during the day. But thank you very much for coming in. I loved having you. And I look forward to seeing you next Tuesday at 1 o'clock Eastern, where we do a really huge event mapping out your 2023 finance blueprint. And don't forget to register for that at creditsuite.com/blueprint. Thanks for tuning in. Have a great